Imagine you have a sinking business. However, you are not ready to emerge from it. With a jaw-dropping $2.9 billion loss, NIO finds itself bleeding cash faster than a punctured tire. But what's fueling this financial firestorm? And can NIO navigate through the smoke to emerge victorious? Stay tuned. Due to intense competition in the largest EV market in the world, NIO Inc.'s annual loss increased last year. NIO Inc. is a Chinese manufacturer of electric vehicles. According to a statement, the Shanghai-based company's yearly deficit increased to 20.7 billion yuan, which approximates $2.9 billion after its fourth quarter net loss of 5.4 billion yuan. For the last 3 months of 2023, NIO reported sales that were higher than anticipated. Stephen Feng, the chief financial officer of NIO, stated, "Going into 2024, we will focus our business objectives, expand system capabilities, and optimize cost management." Even though vehicle margins increased to 11.9% in the fourth quarter, analyst expectations were still not met. Imagine you are in a critical stage of your life and you are finding it hard to move on. To your surprise, you won first for the lottery ticket that you took last week. Hence, you saw more hope in your life. Have you got into a situation like this? Do let us know in the comments. NIO hasn't disclosed any significant product launch plans for 2024, in contrast to competitors XPeng Inc. and Li Auto Inc., both of which are currently profitable. The car maker, which primarily sells high-end sedans and sport utility vehicles, is anticipated to introduce a mass-market brand to rival Tesla Inc. Is domestically produced cars. According to analysts, this move could help reduce losses. NIO reduced its earlier 3-month estimate of 50,045 automobiles to 33,000 cars for shipment in the first quarter. Moreover, deliveries made by the corporation last year fell short of its initial sales goal by not quite 2/3. In the fourth quarter, gross margins were 7.5% as opposed to the 10.2% that the market had anticipated. NIO now projects income for the current quarter of up to 11.1 billion yuan, substantially less than what analysts had predicted. After struggling recently, NIO, which was once regarded as one of the most promising up-and-coming stars in China's EV market, got a financial boost last year when it sold shares to the Abu Dhabi government-controlled investment company CYVN Holdings LLC at the appropriate moment. However, it is anticipated that at current burn rates, the $738.5 million cash infusion announced in June 2023 might not last very long. Alps, NIO's mass-market brand, will begin deliveries in the fourth quarter, according to Chief Executive Officer William Li, who made the announcement on the earnings call. While the second model was designed with larger families in mind, the initial model will rival Tesla's Model Y SUV and feature a swappable battery. The CEO stated that the Alps' initial product would have a 10% cheaper production cost than the Model Y, with an output of about 10,000 units per month. With increasing competition, brands must sustain. However, for that, they need to implement new ideas within their budget. Seems like NIO is succeeding in this act. Li claimed that the main NIO brand will continue to concentrate on high-end vehicles and will only sell models that cost more than the 298,000 yuan ET5 sedan. Alps, on the other hand, would put volume first. In 2025, the business intends to introduce a sub-brand that will be even more affordable, offering cars for less than 200,000 yuan. The United Arab Emirates is another country where NIO is growing. About 10% of NIO's workforce was let go in November 2023, and the automaker has thought of spinning out a few non-core operations to cut expenses. It inked an agreement to receive another $2.2 billion in funding from CYVN Holdings in December. After everything is said and done, CYVN will have 20.1% of NIO and be able to choose 2 board members. In collaboration with a few Chinese automakers like Geely Automobile Holdings Limited and the local government in the province of Anhui, where NIO has its manufacturing, the company is actively marketing its battery swap technologies. Battery swap EVs eliminate driver concerns about range and charging times by allowing drivers to drive into a booth where a charged cell may quickly replace a depleted one. This will help because we need not wait for the battery to be repaired and charge the battery every time. Hence, it will help us save a lot of time. Now let's see how NIO's stock performed at this stage. The fourth quarter adjusted loss for NIO Inc. was 39 cents per share, higher than Wall Street had anticipated. NIO anticipates delivering 33,000 automobiles in the first quarter, far fewer than the 44,000 predicted. Brad Smith and Shauna Smith of Yahoo Finance analyzed these findings. According to them, after revealing a sharper-than-expected adjusted loss per share, we're keeping an eye on NIO's shares as they continue to decline. The EV manufacturer also projects 33,000 deliveries in Q1. However, estimates of a little over 44,000 are missed. Moreover, they said that pre-market share prices are down roughly 4.3%. Whether or not we are in the rearview mirror of an early adoption peak for EVs is, in my opinion, one of the major questions that investors are also attempting to answer. This is a company that, at least as of right now, may be seeing some of that normalization when you consider the even sequential reduction in deliveries that they observed in Q3 2023 compared to Q4 2023. That's down in a consecutive order. According to Shauna Smith, Brad, but this is a loss-making business as well. They lost an additional $2.9 billion when you look at the losses for the past year. Thus, the market is very competitive, and they have no choice except to reduce their pricing in order to boost sales. Moreover, she said that the margin is under pressure as a result. Shauna continued, although margins did improve, they did not reach the desired level for the street. Here, the vehicle margins for the fourth quarter were 11.9%. While that was an improvement, the 13.6% that the street was aiming for was still missed. Imagine your business is facing a lot of issues, and you need to cut off a lot of staff who depend on your income for survival. However, you are so sad to tell them that they won't be part of your company again. In that case, how are you going to deal with the situation? Do let us know in the comments. According to the report, several departments have been directed to create backup lists for layoffs, which could increase the initial personnel reductions within the unit to a 20–30% range. According to The Wire, any prospective employment cutbacks are anticipated to mostly impact non-core firms or those requiring significant investments with protracted payback periods. NIO, which was formerly thought to be a major force in China's electric car industry, has continuously failed to meet its sales goals and is still losing money. According to the company's most recent annual report, there were 26,763 full-time employees as of the end of 2022. The company's business portfolio includes mobile phone manufacturing, battery and semiconductor production, and electric vehicle manufacturing. NIO has not made any more layoffs, according to a spokesman, who emphasized the company's dedication to making dynamic adjustments in the areas it serves. NIO's founder and CEO, William Li, described the previous job losses as a difficult but necessary decision in reaction to fierce competition in a letter to the team. Li stated that NIO has found ways to streamline its operations, save expenses, and improve productivity. According to him, the automaker employs over 5,700 people in sales right now, with over 3,000 of those hires coming in the last few months. Li also underlined that NIO would focus only on the foreign areas that it had already penetrated. The fact that NIO is considering further layoffs suggests that the company is still losing money. Even after an investment fund sponsored by the Abu Dhabi government invested $738.5 million in June to acquire a 7% share in the business. As NIO, the Chinese electric vehicle juggernaut, finds itself in the midst of a financial storm, the automotive industry braces for a seismic shift. But this is just the beginning of the story. Stay tuned for our upcoming videos, where we delve deeper into the fascinating world of electric vehicles, sustainability, and the future of mobility. Don't forget to hit that subscribe button and ring the notification bell to stay updated on all our latest content. If you find this video informative, be sure to give it a thumbs up and share it with fellow enthusiasts. Until next time, keep driving towards a greener, more sustainable future.